The market is down again because Trump made another tariff announcement. This time he announced, I believe it was something like 50% tariffs on everything being imported from the EU. And so the market's down. That means it's time to buy. It means it's time to buy. But I'm not going to say go buy anything. Here's what I do. I buy stocks in companies that I've thoroughly investigated, that I believe in, and that I believe that no matter what happens, whether there's a recession or a downturn, from looking at their balance sheet and their income statements, that they're still going to be around regardless, and they're still going to be growing. There might be some bumps in the road in the short term, but long term, they're still going to be there, still going to be growing, and will be profitable in the future, even if they're not profitable right now. And those are the companies that I like to invest in. And one of the things that I do to help determine if this is the right time to invest into a company is I'll actually pull it up on my screen here. But what I'll do is I look at a certain stock and then I look at, okay, how long, I look at the last year, the whole year, and I look at its high over the last year. Okay, what was the highest price of this stock in this company that I believe in, that I've already investigated, that I know will be around? What was the high over the last year? And then I look at what the price is now. If the price right now is 10%, 20%, 30% lower than the high of the last year, then I know that most likely the price is discounted right now, because the price fluctuations in a stock, Trump makes an announcement, the stock goes down. It almost always, I'm not going to speak in absolutes, it almost always overcorrects, where it's like, yeah, the stock should go down a little bit because there's going to be some tough times for the company. But most of the time, it goes down more than it should. And when it goes up, most of the time it goes up more than it should. And so I look at the reason why I look to see if the price now is 10, 20, 30% lower than the high of the last year, is that gives me a good idea if the company right now is undervalued, if the stock is on discount, if the stock is available cheaper than it should be. And I try to make sure that everything that I buy is cheaper than it should be. And so even with my dividend stocks, I do the same thing. I don't automatically reinvest my dividends. I know that almost everybody who talks about dividend stocks are like, yeah, I just automatically reinvest, keep putting money into there. I'm like, no, I want the dividends to come in, and then I want to be able to do this to the stocks that I've already investigated. There are like 40 different stocks that I have in my portfolio. I want to be able to look at what is the most underpriced one right now when I have capital to deploy. Whether that capital came in from dividends, whether it came in from me contributing. And I want to deploy it wherever I'm going to get the most bang for my buck, not automatically back into the same stock that gave me the dividends. I have a few different stocks that give me dividends, like SCHD, Pepsi, Verizon, Coca-Cola, like a bunch of other ones, right? But I don't want, just because I got paid a dividend, you may get paid a dividend from a stock that is completely overpriced right now. And if you have your account set to automatically reinvest back in that stock, well, you're buying more shares. The dividend comes in, and then you're buying like fractional shares or whole shares, depending on how much your dividends are, of this stock that is overpriced at the moment. Just because the dividend came in from this stock doesn't mean I want to spend that dividend on the same stock. I want to spend it on the one that is underpriced. And right now, because the market has gone down, a lot of things are underpriced. And that's why I'm excited. But anyways, I hope this was helpful for one of you guys, some of you guys. If it was, share it with somebody else that you think might like it. See you in the next one.